Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Monday morning pre-market webcast. S&P 500 E-mini futures daily chart, and what we're seeing this morning, and what we've continued to see through, the last week to week and a half of trading, is this steady fall of dominoes, basically, in resistance levels. We started off with the 50, resistance, break over, turn it into support. Then the 100, resistance, back to the 50, over, 100 support. I would imagine we're going to get a retest of the 100-day exponential moving average today. If that area holds, it's right down here, along with the new weekly pivot at 11.5. If that area holds, which is basically where they bounced it from. They bounced it right off the 100-day on Friday afternoon. Then you can see another attempt at the 200-day and at the Globex highs up at 28. If it breaks above, you're going to see more bears kind of head for the hills. It's been a very steady formula of turning resistance into support. And it's exactly what the bears don't want. The bears want the bulls to kind of get ahead of themselves, to take the market parabolic, to do all these other things. And what you hear from people that are short is, well, we're overextended, we're this, we're that, we're the other thing. Well, I would disagree. If we pull back, it's not going to be because we're overextended, okay? We got a little ahead of ourselves here. Pull back, couple day bounce. This right here is not overextension. This is kind of a range trade between a couple of exponential moving averages that's trying to break out higher, okay? You have to look at it for what it is. So if we do pull back from here, it's not because we're overextended or because we're in some rainbow and unicorn happy bull party or whatever. It's not. All we've done is go and make a low back in August, fail to 50, make a higher low, and a higher high. That's all. And now we're back to the purple line, the 200-day exponential moving average, which is the determiner of who's ultimately in control of the market. Could this whole thing just be a big prolonged test of the 200-day that's going to fail? Absolutely yes. But we don't know that yet. What we've seen early this morning is a high at 28. Let me tighten this up. Chopped around the 200, failed it. This is your daily pivot right here in the 21s. Back up, fail the 200 and push lower. And this is the area that's waiting, in my opinion. You see a push down here in the regular session that holds, everybody will start screaming double bottom. And then, if it does bounce hard from there, then your deciding areas are here, 2167, here at the 200-day, and at 28. If it breaks below, then you can get back into, as much as, the 91 area, which has been important. And you got the 50-day down in the, 82, 83 area. So it's Monday morning. No reason to make any gigantic decisions on Monday morning. Let's see what the market wants to do. We are caught in between a couple of very huge areas on the daily chart, between the 200 and the 100, and the 100 is lined up with the weekly pivot. So, it's a situation where we're 6 above the weekly and the 100, and we're about 6 below the 200. So at this moment, at this exact moment in time, there's really no edge. So let's see how we open and go from there. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. Come check out the webcast, or the webinar rather, this week. It'll be Wednesday after the close at 4:30. I will be back tomorrow morning with another webcast. Trade 'em well, everybody.